Hey everybody, it's Daniel here from InfoRest. Hope you're all doing well. Got an interesting article here for you. I'll put the link in the description so you could read up on it. It says Jeff Bezos aggressively again Tuesday selling more Amazon stock after unloading shares last week, sources say, right? So Bezos sold basically as many as 8 million to 10 million shares, which would amount to roughly 1 billion worth of the stock. It comes after Bezos last week unloaded 240 million worth of Amazon shares, right? So CNBC is saying that, this is an aggressive selling from Bezos on Amazon shares. And for in context, Amazon was down basically 1.5% on that day, and this $1 billion is a small drop, I believe, according, when I search it up on Google. I don't know if this number is right, but it's a small percentage of Bezos' net worth, which is around 167 billion. But a billion is still a lot, right? 8 million, 10 million shares out there that you're selling, especially more than Jamie Dimon, who also aggressively sold his shares of his stock, bank stock. So it makes you wonder what's going on, right? There are a couple of things you need to keep in mind. I know there's probably other YouTube channels out there that's really promoting this and saying that, this is a sign. It can be, or maybe not, right? The arguments against that maybe not is because you have to also keep one thing in mind, that, we're approaching end of the year. You're getting some selling. You can use it in terms of, your when it comes to your taxes. If you're getting rid of losses, you want to balance that out. You tend to also have that when you want to make certain purchases, etc., etc. So you're going to sell some shares. 1 billion out of 167. I mean, that's very small in terms of his whole portfolio. But a billion is still a lot when you think about it, from how much shares he sold and dumped of Amazon. Now, it is also, I'm not saying that ignore this sign. It's definitely still something to keep an eye out on, because he does have insight on what's happening with the consumers, with the consumer spending and so on. All right, he does understand, what's going on with Amazon, and he does understand also, obviously, how inflation is really affecting the consumers out there and affecting the demand side. So there's no doubt that I'm pretty sure a lot of these guys know and understand, who are high up there, that there is, times are going to be rough ahead. Okay. And it's very interesting that this comes after he just sold 240 million shares, and he came out aggressively. Okay, I got to sell, a billion out there, right? And it also is very interesting that you see similarly other prominent CEOs out there in the past sell excess amount of shares to keep a cash position there, right? You could argue that BlackRock CEO, another example just a year back. You could argue also Warren Buffett, Berkshire Hathaway, sitting on an excess amount of cash ready to deploy in the markets. There were past videos that I've done where I also talked about that certain funds were created and started raising money, start to raise cash and a fund pool to be ready to buy real estate when the dump comes. So people are prepared, right? And of course, you'd still have people still invested. You still, you got to balance your portfolio, have some of your money still long in certain stocks, long term, have your hedges, have your safety net, and of course keep some, cash there, keep some dry powder there, that if there are opportunities, you can seize up on it, right? So it's a smart thing to do to accumulate cash, right? You don't want to be fully out of the markets, and you don't want to be fully 100% in. You want to be balanced, and it makes total sense, especially with all the macro data we talk about and how the markets are planning out and playing out, right? So, this article talks about some of the reasons why Bezos is selling, and basically says that Bezos has said that he sells at least 1 billion of Amazon stock a year to fund his rocket startup, Blue Origin. And in 2020, he launched the 10 billion Earth Fund to combat the effects of climate change. Talks about also his charitable funds, giving some money away, recovery funds, the wildfire situations, etc., etc. So they're listing, a bunch of things there. Bezos, who's the third richest person in the world with a net worth of 170 billion, according to Bloomberg, still owns about 988 million Amazon shares, which amounts to nearly 10% stake in the company. All right, so he still owns shares. He's not fully out, but yes, he did trim some small portion of his position and sold his shares. But when you put this all into context of all the news we talk about here, especially, let's not forget Walmart, a behemoth retailer, who came out and Walmart admitted, we see trends, forward guidance getting worse off, because we see the trends of consumer spending, that it's weakening. And here's the thing, okay? If Walmart can see that, I'm sure Amazon can see that as well, okay? Walmart posted good earnings, and you had the stock plunge because of the guidance and because of what Walmart said, that, consumer spending is weakening. Walmart also says that they, encourage prices to come down because it's good for the consumer. Walmart also said that they are seeing some sections of their products, the prices come lower. And they encourage that. Now, why do they encourage that, right? Is Walmart stupid that they don't see that, something's happening on the demand side? No, they understand very well, right? Although they may be sounding like, again, soft landing talk, they may be pushing that out in their press conference and whatnot. But they understand well that, when recessions come, when really big slowdowns happen, you can't compete. Other retailers out there, especially smaller ones, can't compete with Walmart. They can really withstand the recession because they can offer lower prices, and they understand that their marketing methods is all about pushing out lower prices. So they do understand that when times are rough, people are going to go to Walmart and look for cheap, discounted, products. Look for cheaper prices, and you look for it in two places: either Dollar Tree, Dollarama, Dollar Store, or Walmart. Those are the two places. And if you're getting produce, you can also get it from Walmart. So now also Walmart mentioned that they're not 100%. Well, they didn't say it explicitly, but they did mention that shoppers are also watching what they buy. So even though they are buying things from Walmart, they're still careful on the price. They're just substituting certain things. Instead of buying product A, they're going to buy maybe product B. Or if they do buy product A, they will buy less of it, right? So they are seeing it. The sales will get affected still because the demand side is being affected. So overall, everyone will be impacted when the demand crunch happens. It's just that, Walmart is better prepared and is stronger and is able to withstand the weather because they're a bigger company. They have stronger pricing power and more control over the market, and more of a dominance in the market. And consumers will still need to go do their grocery shopping, still need to eat, still need to be, they will be careful. The sales will be affected, but Walmart invites it because, higher prices for too long is not the solution, because it's going to keep sales at an ugly pace or even deteriorate. So they want prices to come down. And if the prices do come down, then it can help Walmart again bounce back up higher, because as things start to ease up and get better eventually, right? The consumer will be able to handle and shop better when you have better pricing, right? So Walmart's a very good example there, and they mentioned it, and I'm sure Amazon's feeling the same thing. Let's also not forget Amazon, who also is laying off a lot of employees, has done it in the past, last year, and just recently announced that they are going to lay off a lot of their workers in the Alexa department, right? So a lot of layoffs are happening there. And like I said, it happens slowly. You're starting to see they did lay off a lot of people last year, but they're laying off more this year. And guess what? 2024, what are you going to expect? More layoffs as well. They're just doing it slowly because they don't want to be too early onto this. The companies will never be in the business of predicting and saying, okay, we expect a hard landing recession, so let's, kill the workforce. Because if they're wrong, then it's going to be a bigger cost and it's going to be a big downside for them. Because then they got to go back higher and it's going to be more costly for them. So they will wait. And if things get worse off, then you will see the next wave of aggressive layoffs, which is going to then feed into those jobs data and those jobs reports. So anyways, let me know what you guys think. Do you think these are all signs? Does it make sense? Bezos selling shares. I mean, if you put it all together, are you seeing that, things are looking not so rosy for 2024? Let me know what you guys think. Leave a comment below, subscribe, hit the like button, bell icon to be notified on the next video, and I'll see you guys around. Cheers. Bye.